We're almost 3 hours into trading on Tuesday, November 30th, the last trading day of the month. Hello, traders. Got a lot of information to cover. Mainly, I want you to know that this is a reliable source of trading information. In every single video, I tell you what is setting up, I give you the trades, I review them at the beginning of each video so that you know what I told you to do the previous video and how that played out. For weeks, I've been telling you, do not take a lot of swing trades in here. This is a low probability trading environment with compressions right up at the all-time high. And we know previously that the volume starts to wane and we set ourselves up for big market drops. So you should not have had a lot of swing exposure up here. So let's say that you did have a lot of swing exposure. You come in on Friday and you're wondering what the heck to do. On that market drop right here, I told everyone, I came in specifically Friday morning to write my market comments. I said, hey, listen, if you're overexposed, this is a warning shot. You're going to have a chance to reduce your risk on Monday. Look for a market bounce, and that's exactly what we got. How did I know that was going to happen? Well, much of that is experience related. I knew that we'd had a strong market rally previously. I knew that buyers would come in, they would buy that first dip. That would be your chance to exit your positions, lighten the load, set up for another retest. Sunday night, I did a video. Please go back and watch my Sunday night video just for confirmation that all that I'm telling you right now actually was true. Sunday night, I said, listen, if we go back and we take a look at the first crack in the dam, right like this, and we go back and we take a look at what's happened off of these prior moves like this, we can see that there is follow-through selling. Please go back and watch that video. It'll confirm that this is a good resource for you to get your trading information from. Today, I had mentioned in my comments, this is my blog, www.oneoption.com. Use the number 1, free information. I post this before the open every single day. And yes, I am going to get on with market analysis and market commentary, but I want you to first have confidence in what I'm telling you and what I'm teaching you. If you go down to my market comments today before the open, day traders, I believe an early bounce today will set up for an excellent short. Be patient and wait. I'm going to go back and take a look at my comments from Friday, and you'll be able to see market down big. What should I do? If I go into those comments from Friday, you can see what should swing traders do? The main takeaway, I would not panic out of positions on a holiday shortened trading session. Evaluate the price action. Here's what we want to see. Take the opportunity Monday to close down your bullish positions because we are going to have a retest. That's been common for us to see. So not only do I have proof of what I'm actually telling you in that, but I also want to show you comments from my chat room this morning. So this is an hour into the open. I am looking to short. This is an hour and 6 minutes after the open. We had lots of reasons for doing so. I'm going to continue to scroll down. I started legging into a short at 462.60 on the S&P 500. I added to that position. I had mentioned to everyone what I was looking for and what would get me to add. You can see now I added at 461.80, and if I continue to scroll down, you're going to see I have a bid for SPY, took 40 points on half the position, took 45 points on the other half, and I am currently short again. Now let's go through the analysis and I'll tell you how I knew that the market was setting up for a big drop. So I'm going to pull this away. And I also had mentioned in Sunday night's video, that was the last video I did, that Netflix was an attractive out-of-the-money bullish put spread. So let's take a look at Netflix first. That's how I like to start my videos. There is the low from Monday. Look, stock is right at the low from Monday. It's holding up extremely well during this market bloodbath. So the idea is to wait and evaluate and see how far the S&P 500 comes in and I have 452 as a goal. We'll be taking a look at that. If Netflix was able to hold the bid very well during the market retest of support, this will set up an excellent out-of-the-money bullish put spread heading into year end. And I highlighted the 620, 615 bullish put spread, trying to get that done for $1. So that's still on the table. I like that trade. Now let's take a look at what's going on with the market. We'll see if we can find another good out of the money bullish put spread to sell. But it's too early. We need to make sure we've got market support. So let's go in and take a look at what the S&P 500 is doing. Let's take a look at the price action and what it's telling us. So early in the day, the 1OP indicator is our guide. That's what tells us if we need to be long or short. You can see we're getting some bearish crosses in here, but here was the tell. So we had this market drop. We're looking for support to be tested again after that heavy selling on Friday. So we rally up, we don't quite close the gap, and we get this long red candle. Okay, well, so we know there's a little bit of resistance there. Plus, these candles have lots of overlap, and they are small. They are relatively small. They are not long like these are. So then we pull back, we get another test of the high of the day. Try to get through there, couldn't quite get through there. Now we poke through and whack-a-mole. They whacked it right back down. Upward sloping trend line right here, bearish 1OP cross right in here. So we know that we've got weakness coming in and the low of the day is vulnerable. So I was short up in here, covered that short here. Now what am I looking for? So once that short has happened, and by the way, it's very difficult to short this market. We are in such a strong bull market that every time you get these shorts, there's a chance for a huge, violent snapback rally. So you have to be very, very careful on the short side. For that reason, I'm favoring shorting the S&P 500, shorting the NQ, so that I'm not spread out along 5 or 6, 10 different stocks on the short side, having to scramble when the market does find support. So I can very quickly cover that short. A little bit different on the long side. On the long side, I'm definitely looking for stocks that have relative strength, that are holding their bid very well. Those are the ones that I want to own. And because the market has been in such a strong uptrend for the last 12 years, the last 2 years, market's been very, very strong. So I don't mind owning those stocks with relative strength because that's what gives me cushion. If I'm wrong on the market and the market decides to have another leg lower and another leg lower, I know these stocks are going to hold their bid very well and that buyers are still lined up on them. So if the market takes another leg lower, that stock flatlines, it gives me a chance to exit that stock without losing my shirt. Get out of the position, let the market come in even further, keep an eye on it, see if the market's ready to bounce. So in any event, the tell here was when we're looking to re-enter a short position, we want to make sure that this bounce is very brief and that it doesn't last more than 20, 25 minutes or so, and that the amplitude of the bounce is pretty short. So we don't want to see a lot of retracement into this long red candle because that tells us that sellers are whap, 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 whap. They're still there. They are taking advantage of any little market rally to sell. So when these bounces are brief and they're shallow, you know the selling pressure is still there. Now, if we had had a bullish engulfing candle, followed by another long green candle and another long green candle, and now we're all the way into this red candle here, then we know that support is there and that we can start considering long positions. We also had another support line coming into play, and that was the low from Friday. So I'm going to talk a little bit about this because there's a 15-minute chart. When you have a low that's established right here, here, here again, this is a 15-minute chart. So this took place over the course of an hour. Buyers are nibbling. Here we go again, buying here. When you have that type of price action, yes, it's support, but the programs are going to chase these traders out if they can. They're going to try to trigger these sell stops that are layered up here. How do I know? Because think of what you're taught in books. Buy low, sell high. Buy low, sell high. Keep your risk small, keep your upside potential big. I mean, that's what everybody's taught. These programs know that, and they know that if you buy here, you're going to have a stop just below it because you're going to keep your risk small, and you've got lots of nice upside on a bounce like this. So it's natural for them to try and flush you out of these positions. And the more touches you have at these support levels, the more legitimate that sell stop is, and the more they are going to gun for it. So I told members here, yes, we're going to bounce off of this area right in here. That's why I took profits, but I'm going to be watching for re-entry right here, because if we're able to take out that low, it's going to force these traders to cover their long positions, and that will fuel the next leg down. It's exactly what's happened. Let's go into the daily chart because we really need to get our bearings on where the market might come into play. And we're going to put up the major moving averages, put up the 200-day, put up the 100-day, put up the 50-day, and you can see where these major moving averages come into play. Right here, we've got 452, that's the 50-day moving average. That is also horizontal support. That was the previous breakout. I think that's going to be a really nice level, and I believe the market should be able to find some support at that level. That would also set up well for selling some out of the money bullish put spreads. Pete, why are you selling out of the money bullish put spreads? For crying out loud, year-end rally, Santa Claus rally, 12-year rally, blah, blah, blah. Because I don't know how the year end is going to fare. We're starting to see some selling pressure. We're on the brink of getting another FOMC statement in the middle of December. That's about 2 weeks away. Tapering, possible tightening. Yes, now we've got the new COVID variant coming into play. The market is priced for perfection. We have not seen stock valuations like this since the year 2000, and we don't have perfection. This is not perfection right now. So we're seeing some profit taking. Let it come in. The bullish put spreads allow us to distance ourselves from the current action, take advantage of elevated option implied volatilities, and take advantage of accelerated time premium decay. So I do believe that the market's going to find some support at least into year end, muddle around, try and drift a little bit higher. That all favors selling out of the money bullish put spreads. If the bottom falls out, we still have time to react because we have some cushion on these trades. And if everything really goes to hell in a handbasket and the stocks that we're using this strategy for break key technical support levels, we can buy our short put in and let the long put run. So we've got a lot of alternatives open to us, but mainly I do feel we're going to find support. I do believe that the market's going to at least be able to stabilize around this 452 level. If we find really strong stocks, we sell that premium, we should be in excellent shape, but we must wait for market support. We are not catching falling knives here. So, 5-minute chart, take a look at what's happening with the S&P 500. And you can see that right in here, we had this 1OP indicator was continuing to go lower. That is bearish. And now we're finally getting a bullish cross, have a little bit of a bullish engulfing candle here. What does this price action tell me 2.5 hours into trading? It tells me that there's a little bit of support forming because this is a what I call a marginal new low. You can see the low right there. Here's the low right now. So yes, on this move lower, we didn't stack long red candles down, 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 down. That would be extremely bearish. Now we're starting to compress a little bit and getting a couple of mixed candles in here with overlap. So that tells me that we are getting a little bit closer to support. And you can see we're at 456.23 on the SPY. We get down to that 452 level. That's still 40 points away. That would be a big drop. So we still have room to drift lower to get down to that level. But right now, yeah, I'd kind of be looking to see what happens on this 1OP bullish cross. Incidentally, and I've had this asked of me a couple of times recently. Option Stalker is a trading platform that I developed. It has proprietary indicators. It's available to the public. Yes, 1OP is an indicator that tells us for stocks and for the S&P 500 when we should be buying. So the idea here is to let this 1OP bullish cross run its course, see what happens. From a short standpoint, I would love to see this 1OP indicator rally, rally, rally with little to no lift at all in the market. Then the next bearish cross would lead to the next leg down. If I see a bullish cross here and I start seeing long green candles stacked, and then we get a little bit of a pullback with a higher low double bottom, then I think we can be confident that the market has found support and that we have a chance to rally. Right now, this is heavy selling pressure with follow through. Look for the prices to continue to drift lower today. We're already halfway through the trading day. I think we're going to see weakness. Any bounce is not likely to come until the last 45 minutes of trading, the last half hour of trading. So you don't need to be in there rushing around trying to buy stocks right now. This is a bearish trend day. So what would we want to do? What kind of search would we want to run to find these bullish stocks? So remember, on the downside, I'm short futures and I'm only trading futures as the market continues to move lower because I don't want to be spread out over 10 stocks where I have to scramble to cover those shorts. I'm going to be short the futures so I can get in and out very quickly on the short positions. But for buying, I do like to be long stocks. And so I'm going to go in and I'm going to take a look for stocks that currently have some decent relative strength. They are strong relative to the market. So I'm going to go into the custom search engine. I'm going to keep this very, very intuitive, very brief. I want to see strength on a daily basis and a 4-hour basis for the stock, and I want stocks with good option liquidity. This list is going to be less than it was when I ran it a couple hours ago, but look through here, you could see AMD, Cisco, Dell, Hewlett Packard, IBM, Intel. Those are Microsoft. Let's see what we get. So we've got a pretty decent number of stocks in here that we can take a look at. These stocks are weathering the storm. If I really wanted to go in, I could actually put in stock greater than prior day high. Well, we're not going to have many candidates when I do that because hardly anything is going to be higher than the prior day's high. So I'm going to go through and I'm going to click through a couple of these charts. And I'm going to start with the daily chart, and Abbott is one of the top ones. You can see we've got nice support in here. Sure, that would be a decent candidate. Going to go down to AMD. That's been super strong, upward sloping trend line. You want to see that preserved, but look at that rally. Yes, this would be a good candidate for selling out of the money bullish put spreads. Look for that first line of support. 145 would be that strike price. Going to continue to go down. ASAN. Not crazy about that because it's right on major support. Look at that red candle. No bueno. We don't want anything like that. CHWY. No, it's been pulling back. I want something that's strong. I want to be up here in the upper right-hand corner of the chart. I don't want to be down here in the lower right-hand corner. I want stocks that are up right here. So I'm going to keep flipping. Let's see what we can find. Not bad. Holding support in here. Bullish flag possibly in here. This is COIN. We're looking for something really nice and really strong. Dell, that's a big drop right there, but I believe there was some reorg on that, so that's why it's been that way. Yes, Hewlett Packard will certainly, Home Depot will certainly work. Look at how well that stock is held up. So anything down here around the 375 level would be fantastic. If you get any kind of market follow through on the downside and the stock pulls in, yeah, Home Depot's holding up really well. I like Home Depot for a possible pick. Going to continue to go down. IBM, no way, hate that. Just clicking symbols. INTC, nope. Weak stock. LCID. I like it. I like it a lot. Look at that upward sloping trend line right in there. That's your support level. Comes into play somewhere around $48. Stock is currently at 51. This is a mover, so you can probably go way down, maybe even to this $42 strike price and try and get a trade done at that level as well. So I'm going to take a look and see what we've got down on the $42 strike price for that. And I'm going to go out only 2 weeks, and I'll be looking for a 42.41 bullish put spread. And you can only get about 12 cents to that right now. I would want 20 cents, but look, you can get all the way down to $42. You got a lot of cushion. LCID. Really like that chart. Could be my pick of the day. Take a look at Microsoft. Microsoft holding this support level pretty well. Let's do an SPY overlay too. Then you can really see. Look at that market. Ka-chunk, ka-chunk, ka-chunk. And look at Microsoft hold up super, super well. Netflix, you already know I like that one because I highlighted that Sunday night. NVIDIA, sure. Look at NVIDIA, just like AMD, looking good. Nice support level right here, down to about the $280 level. Oh yeah, I think that'd be good. A 280, 275 bullish put spread for a buck. That would work nicely. Got to have that market support. I'm just clicking through to show you some other stocks that are holding up well. Look at Qualcomm, beauty, blam, market down, stock holding up. This is the tell. This is why we trade relative strength. It reveals what institutions are doing. And when the market is down this big and the stock is treading water, they are in there buying as much as they can get their hands on. Qualcomm, like it. RBLX. Look at that strength. Also looks very, very good. I'm only going to do a couple more in here, but I'm giving you some great trade ideas. Tesla. Tesla really holding up well in here also. And I think that might be the last one that I'm going to show you. All of these are good picks. Let me just visually go through my list here. And so AMD looked good. I like that one. COIN, maybe not so much, but okay. Home Depot, love that one. LCID. That's going to be a bullish put spread that I'm going to suggest. So 42.41 bullish put spread going a week and a half out for a 20-cent credit. If you can get that, I like it. If you got to go 3 weeks out, I like it. Wait for market support. MSFT looks excellent. Netflix, you know I like. NVIDIA looks good. Qualcomm looks good. RBLX looks good. Do you see how easy this was? Tesla looks good. Just have to wait for market support. And look, 10p. Get a nice cross in there. You can see here that market support is starting to form. Does this mean I need to go gangbusters right now, Pete? I'm ready to buy. What do I got to buy right now? No. Remember? I told you. This is a bearish trend day. We are not going to bounce for until the last 45 minutes, the last half hour of trading. So calm your jets, have a cup of coffee, look at the market, run your searches, find your stocks, wait for that market support, wait for that hard bottom, wait for that bullish hammer, wait for the follow through with stacked green candles. Then go in and still distance yourself from the action by selling out of the money bullish put spreads. Take advantage of that elevated option volatility. Take a look at VXX. You can see how it's spiking. Take advantage of accelerated time premium decay. That is how I would trade right now into year end. You can expect that you might take a little bit more heat, might come down and test that 452 level, but if we start to see some strength over the course of the day and into the close, then I think you can put some of those bullish put spreads on. If you like this content, let me know. Please give it a thumbs up. Please post your comments. When I see comments, when I see your feedback, it motivates me to do more of these videos. So I'm trying to give you as much education in each one of them as I possibly can. Good luck with your trading. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.